I'm Zachary Hogan at Start Trading. We're looking at the British Pound US dollar. And for those of you who were able to join our live training on Wednesday, June 7th, we had analyzed this chart and we drew this oval. We had a lot of confluence. If we are to go and look at our Renko bars, we can see right now that price is trading down into this whole level. Now, why at this time are we experiencing bearish movement? If we come over and look on the monthly chart, we could see that we did have a bearish candlestick pattern form in May. We have lots of potential demand within this whole range. And coming back and looking on the daily, just so that we can really get one last look here at the bigger picture, it's almost as if the British pound US dollar specifically is stepping its way up to the 132 target that we have. Now, on our left, we do have the British pound future. And we can see right here that there is some significant difference on the futures chart opposed to the GBPUSD. They're very similar. We can see that we're stepping up in the same way. We can see that the wick on the GBPUSD is a little bit lower than on the British pound as an individual currency. And we can also notice that we have this candle right here that has formed, punctured into our area of demand, closed with an indecisive manner. We do have a gap, and we can see this clearly. Let's go and look on the 15-minute chart. We can see that we gapped down, and this, in my opinion, was the anchoring point for what could be a very nice bullish movement to the upside, pushing us beyond into our whole 1.3 psychological price range. Now, looking at this and seeing how the market closed and seeing all of the bearish movement and realizing that there still is going to be a lot of demand within this whole area, we could very easily experience another gap to the downside over the weekend, come market open on Sunday, and then we could see that be filled very, very quickly and then just continue up to fill what is in here. Where could we go if we're not looking to fill this gap right now? Well, the next point really that price could be attracted to is this whole 125.3 to 125.7 zone. It's about a 40 pip range, but at the end of the day, I don't personally feel that price is going to go that low. We're going to really have to pay attention to what happens come market open. And right now, my bias on the GBP, all GBP currencies, is to the upside. If we go and if we look at the GBP JPY, for those of you who that trade this, we can notice that there was a little tiny demand gap that did get filled recently. This same demand gap can be seen on the US dollar, Japanese yen, and we can see right here very, very clearly that we came down into this whole area of demand, we tested, and now we are pushing to what looks to be like these higher levels with the trading activities. So we're really going to have to stay on top of it. There's a lot of upcoming economic events this week, and remember, by watching this video, you do agree fully to the disclaimer. You are accountable for your actions in the market, beyond the market. Really, what I can help you with is that awareness. So we're going to go and we're going to switch gears. We're going to pull up Forex Factory. So let me just put that on the screen for you. And we can see right here that come tomorrow, there's not much going on. On Sunday, there is an Australian dollar bank holiday. We also have the French legislative elections that are, happening. We just had Theresa May as well for Britain come out victorious into looking to form a new sort of government for Britain so that they can proceed with Brexit. So, really, looking at Monday, we can see that. So, looking at Monday, we can see that there's not too much going on. Tuesday, we do have some British pound news, as well as on the US dollar. Come Wednesday, it's when we can expect a potential high level of volatility. And why do I say this? Of course, we do have the standard British pounds average earnings index here. This is a 3 months every year report. So essentially, it's like a quarterly release. Now, with the US dollar, we do have some news come New York Open. We also have crude oil inventories, followed up by the Fed funds rate. And we are anticipating a rate hike. Previous month, looking at the history, we can see the first hike came in March. Second month that we had that 1%, it remained. And now in June, just literally 3 months after this first hike, we're looking for another potential raise. So the FOMC, they will be holding a press conference. We do have some Australian dollar news in the evening, but really the US dollar is where I feel the volatility is going to be this week. Looking at the end of the week, on Thursday, we do have some Swiss franc news going on, discussing their monetary policy. We also have the interest rates and discussing of the British monetary policy. And then leading into Friday, we have the Japanese yen policy for their money as well. So lots of volatile events that are upcoming in the market this week. And really, it's just about having that awareness. It's about being prepared, and more than anything, realizing that you can trade consistently. It just takes that practice. It takes commitment. And we're going to take a look at the dollar index, just so we can see how it's progressing. Now, looking here on the daily, we can see that we did have a bullish push in the last half of the week, right up to our area of supply. We got this bearish candlestick pattern. This, to me, is indicating that we could see that continuation of the bearish movement. And mind you, we could also get a gap to the upside, and then followed by closing that real quickly and continuing to the downside. So what would this mean? This would mean that pairs such as the US dollar, Japanese yen could have some downwards movement. But really, when we're looking at Forex and when we're looking at currency pairs, we should always consider the value of both sides of the pair. Now, something like the US dollar Canadian, we can see that we were just kind of consolidating, ranging all through Thursday, right up until Friday morning. We pushed down on the oil inventories news, and then of course we created this low point. Now, the US dollar Canadian, we're not going to get too much into it on this video specifically, and really this is more or less just a quick update for you of what I'm looking at, what I'm considering. I'm expecting that continued bullish movement on the British pound, but I still do see the potential for bearish movement. Our oval, we did have some buy limits that were successfully filled in the trade room. So overall, it was a very great week for me. I managed to collect about 396 pips, and really that is not your average results. So don't come into this expecting that you're going to be able to do that, but realize that it is more than within your power. And really, when it comes to chart analysis, it can be simple. Now, all that we have on here, we have a 200 exponential moving average, we have some targets, our daily Fibonacci, we have an area of supply, an area of demand, and we can see that we did close above the area of demand that we identified. So seeing a gap to the downside, even to the 126.9, let's say 50 pips to the downside, there is a high chance that we will see that be filled very, very quickly, and then pushing beyond into the upper levels of all of this trading activity at the 128 range. So if you have any questions, feel free to telegram me. Be certain to subscribe to the channel and receive these weekly updates. I am Zachary Hogan, also known as IZXTG on social media, and I thank you, I appreciate you, and really just go and make sure that you are receiving value from the content that I am creating with you. And without further ado, safe and happy trading next week, and have a beautiful weekend.